Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/on-the-tape.
Hey, this is Dan Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my on-the-tape co-host Guy Dami every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. We hope you enjoyed this episode, and thanks as always to our presenting sponsor, CME Group.
This is Trading Spaces. I'm Dan Nathan, your Guy Dami. We host the On the Tape podcast. It drops Fridays. It is sponsored by CME Group, which is also the sponsor of these Trading Spaces. We are also joined on Fridays with Danny Moses of the Big Chill, or no, that's your joke, the Big Short fame every Friday. That drops. We had a great episode this past Friday with Packy McCormick. We had Melton Demers. We had Jared Dicker. We talked about what the hell the metaverse is. This week, we got a really great group. We have Michael Batnick of Ritz Management. Yes, Batnick. We do. And we have Stephanie Link of Hightower. She's also on the Halftime Report, one of your favorite shows on CNBC. So that drops Friday. All right, Guy, you and I do these Trading Spaces every Monday and Wednesday at 1 p.m. while the market's going on here. We got a market here. We got some interesting things going on. We're all breathless. The Rivian just opened, Guy. You see, this is trading like 108. It was priced at 78. Well, it's interesting from a sentiment standpoint.
I just said it's great. Oh, you want me to be more enthusiastic? I said,
I'm
it's
just
great.
saying it's interesting. It opened at 106.75. It was priced at 78. They raised close to $10 billion. The company's pre-revenue. We know that Tesla just passed $1 trillion in market cap. Here it is. Tesla. What did it get as high as? 1240. 1240. It's at 1064. It was trading below 1,000 today. I thought your 900 number was going to be coming into play, guys.
Got to 980. They ain't over yet. It's interesting. I can't say with great certainty, but I think north of 100 puts Rivian's market cap like either side of $90 billion or something, which I only mentioned because it's, it just pales. I mean, it just puts Ford and GM in such sort of the in the rear view mirror. It's really remarkable. And I'm sure Rivian's a great company. And I know you bought the R2D2. You went on the website and got it. But I just think all this says to me is Ford specifically, but I'll throw GM in there as well. It continues to be too cheap. And that's not Monday morning quarterback. I mean, this is something I've been saying literally for the last 9 months.
Yeah, well, I mean, listen, again, we just continue to see a whole host of things just kind of trade what we think is somewhat disconnected from fundamentals. And maybe we're just thinking about it wrong. Maybe it's the wrong construct.
Look at you. I like that.
Well, listen, I'm learning a lot from a lot of our younger friends here, Guy Dami, about.
Yeah, Mac, J. Dick, Melton. It's all those. I mean, it's good stuff.
Who's on here? Michael Saylor's on here. I love Michael. We love Michael. If Michael wanted to jump on here and kind of help us think about some things differently a little bit.
No freaking way.
Michael
Saylor's here. I mean,
Michael's the man.
In the pantheon of badasses, he's right there. So if he wants to join, you let him in. But while he's deciding, which is fine, just let me read a tweet I put out earlier, Dan, and I would like you to opine. Okay, this is 4 hours ago, I think, or maybe even more. From Guy Adami, that would be me.
Yeah.
As citizens, we put our collective faith/fate in the judgment of these Fed officials, period. In Kaplan and Rosengren's, although having done nothing illegal, they did not have the obvious good judgment to not trade stocks and foresee the subsequent optics/ramifications. Let that sink in.
Yeah, well, I did let it sink in, and I will tell you this. I think that Michael Saylor probably has something to say about some of those gentlemen, and they generally are gentlemen that we put a lot of faith in, our financial faith into the future here. Wouldn't you say so, Guy? And
I would hope so. And if he unmutes himself, I would love to hear what he was saying. Michael, how are you? Before you start to opine, Michael Saylor, I have said, I have written, and I'd love your take on this amongst the many villains of the 21st century, and there will be many. Central bankers are going to be at the top of the list. Thoughts, Michael Saylor, and thank you for joining.
Well, you're my two favorite spaces, guys. Thanks for having me. This, like I saw you on my lunch break. So just so you know, I'm having lunch and I've decided that I'd rather hang out with you than eat.
Gotta eat. You gotta eat.
Well, I think we're monetizing everything, right? What you've got is a civilization. We're printing a lot of money. So there's a lot of money being put in the economy. And the last 18 months has been a fascinating experiment. And what does the free market choose to monetize if I give you excess money? Everybody scrambles to buy a house in the suburbs. You remember for 3 months, everybody went into bunker mode, and then they started moving out and buying up Hamptons real estate. And then they bought up all the suburban real estate in Connecticut. And it took a while, and then eventually we saw that in the housing prices. And for a while, people couldn't buy anything, or they couldn't do anything. So the Main Street economy didn't have inflation. But then when everybody started to move again, we saw inflation at Main Street economy, and you saw the SPACs. A SPAC is like we monetized someone else's venture project. Or monetize someone else's, aspiration. And then we started monetizing meme stocks, and we monetized some crypto tokens. We monetized the Dogecoin. Then we monetized the Dog coin. We monetized, there's actually 2 Sailor Moon coins. I didn't actually know about that. There's about a dozen Elon Musk coins. Can't slow it down. And we didn't really monetize gold that well until it looks like today they're trying to monetize it a little bit, but it's not going to work. And you know what I think? I think that if you're going to monetize something, theory says you should monetize a synthetic digital asset nobody can print any more of on a dominant secured network, and that's what Bitcoin is. Monetizing housing, not a good idea, right? We got that. As soon as you monetize something with utility like natural gas, the politicians want to put a price control on it. We monetize housing in Canada. The Canadian politicians want to make it illegal for foreigners to own houses in Canada. You want to monetize something you don't have to eat or live in or burn as fuel for the winter, or else you're going to get price controls and wage controls and the like. And so what do I think? I think buy Bitcoin, guys.
No, I know you do. And I think you're sort of reinforcing in a far more eloquent way my initial reaction that these central bankers are leading us down an extraordinarily dangerous path. I know Dan has a question, Michael.
Yeah, well, Michael, since we last talked, and I mean, you just mentioned a bunch of these altcoins and stuff, and we know that you kind of lean towards the Bitcoin here, as you just said here. My question is, though, we've seen an explosion, right, in volume in NFTs and in a lot of related kind of crypto protocols, right? What's your thought there? I mean, are you happy that it stays in the crypto ecosystem rather than going out and I guess 5 years ago, a successful ICO, you take the money out and you buy a Lambo or you buy a boat or, with a name on it to the moon or something like that. Well, how are you thinking about the ecosystem, the way it's evolved over the course of 2021? And when you think of like, you just kind of were saying this in a way where we monetize this, you're really talking about asset bubbles, right? And are you seeing asset bubbles in the crypto ecosystem right now? And how are you just generally feeling about that away from Bitcoin?
I walk into restaurants now, and sometimes I sit down with people that are older than me, and they don't know what Bitcoin is, but they heard about it on the news or something, and I got to explain it for an hour and a half. But then when I'm walking out the door, the lead waiter stops me and thanks me for what I'm doing and says all the guys in the back room are all buying Bitcoin and they all love crypto, etc. Thanks for what you're doing. And my conclusion here is the environment in the last 18 months has driven everybody to go download Robinhood. They're all like figuring out they got to buy stocks or they got to buy crypto. And and they're being poked, right? Everybody's reaction is, I got to adjust. I got to do the right thing for me. And the more flexible they are, the faster they're adjusting. So right now, what you have is people that would not ordinarily have bought stocks went and bought stocks last year, and this year people that would not have ordinarily looked at crypto. War, necessity is the mother of invention. Nobody changes unless there's a war. There's a war, right? There's a war on currency. There's a COVID war. Everybody opens up their minds. And so I think that we're ferociously looking at different options that we never considered. And in the crypto economy, you've got Bitcoin, which is like your non-sovereign store of value, or digital gold. Then you've got all the DeFi NFT, which is like tech venture capital, new things that people want to try and figure out whether there's an investment opportunity there. And then you've got, the meme coins, which are kind of like just the speculative things. But for a while, right, the politicians made it illegal to gamble on sports, right, because they shut down all the sports, right? In fact, even right now, it's kind of, there are so many rules that tell you what you can and can't do. You can't fly to Vegas so easily anymore. You can't bet on some sports game if you live in the district, but if you don't live in the district, you can. So there's so many regulations on people. They're looking for what's possible. And that means that if I take away, your trip to Atlantic City, then the next best thing is you bet on SHIB versus Dogecoin. And if I, you know what I mean? Like, people are figuring out what they can do. And partly it's technology, partly it's investment, partly it's speculation, partly it's entertainment, and then partly it's savings. All those things are happening at the same time.
Michael, a while ago, I had the honor of interviewing you. I think I was on Power Lunch with you over a year ago, and I've interviewed you a number of times. And one of the first things you said to me, and it really sort of caught me off guard, but I thought a lot about it, is cash on the balance sheet of a corporation is not an asset, it's a liability. And with each passing day, that's proving to be more and more true. And given some of the numbers we saw today, that's really coming to fruition. I'm asking you, I'm not asking you to name the company, but do you get a lot of incoming calls from CEOs and CFOs, I guess, wanting to discuss exactly that?
Yeah, more so. I mean, every single month, the interest has increased, and I have a lot more conversations now than I did 6 months ago. I think everybody's waking up. I think the story, when I got going, up until Elon Musk Day, I think on the day that Elon Musk announced that Tesla bought Bitcoin, the entire story broke into the mainstream media for the first time. And that's, remember that was like February or so. I think that before that time, people used to lament that nobody in the mainstream media talked about Bitcoin, talked about crypto, talked about anything. And then after it, they said, oh, well, it's an odd thing. There's a couple of oddballs that are doing this. I think in the past month, what we've seen is we're moving into a new stage. Maybe you could, you put your finger on the real seminal events, the third stage, right? First stage is like crypto's not mainstream. Second stage is mainstream's not sure if it's a good idea or a stupid idea, but we're talking about it. Third stage is the president's working committee puts a stablecoin report and says banks can actually issue stablecoins. People didn't quite get that, but that was a green light for Bank of America, Citigroup, and JP Morgan to issue $1 trillion worth of stablecoins, if you didn't notice. Wow. Second, Congress and Senate likes crypto. That was a surprise. We thought they were going to be against. And we have the head of the SEC getting lambasted and beat up by congressmen and senators for not moving faster to normalize Bitcoin, especially to normalize crypto, give us guidance. So that was a big thing. That just happened a month ago. And the third thing is 2 ETFs getting approved. And the fourth thing was the head of the EU Central Bank, the head of the Fed Central Bank, and the head of the SEC and the head of the CFTC other people getting grilled and saying, no, we're not going to ban cryptocurrencies and Bitcoin's here to stay, right? And once you got your head around that, that just happened in the past 4 weeks, guys. Like in 4 weeks, we turned the corner from, I sat next to guys a month ago. I sat between one guy with $55 billion, another guy with $65 billion. And the guy with $55 billion, owned a ton of Bitcoin exposure and he thought it was the future. The guy on my left side said, oh, yeah, I'm just afraid it might be banned. And they're all waiting to hear the administration, Congress, the Senate, the regulators say it's not being banned. And if there was any clear signal, it's if you're going to approve a Bitcoin ETF, it's not going to be banned. We turned the corner, and I feel like now we're in the third stage. And the third stage is that this is institutional grade asset. You can buy this stuff. You can hold this stuff. Now, that's third chapter in the 10-chapter book, right? Which is, I guess it's good, right? We're still early. But before we got that third chapter, we had during the last 6 months, the Ray Dalio overhang of Ray saying, in essence, it's such a good idea, I'm sure some politician will ban it. Like literally, that's where we were for 6 months with people with 10 billion, 100 billion, $50 billion saying, okay, I get it. It's a good idea, but it's just so good an idea. There must be a catch. And everybody just heard in the past 4 weeks, the catch is, if you want to issue $1 trillion in stable coin, you got to be a bank. The second catch is, if you want to own $1 billion of Bitcoin, then you got to actually pay your taxes on it if you want to transfer it. And you're probably going to have to disclose it if you transfer it or in a KYC fashion. And the third catch is all this other crypto stuff. We still got to work all that out. We got to work out the security token, the DeFi. We got to work that out. There's stuff coming. If you get that, now that's a green light for people with a lot of money to get into this space. But having said it all, the holdback is still, the overhang is still, the FASB accounting, indefinite intangible accounting is a holdback. We're still waiting for the FDIC, right? But the chair of the FDIC says we got to figure out how to let banks hold Bitcoin on their balance sheet. I mean, that happened a week ago. Mm-hmm. So we need big banks. We need the JP Morgans and the Citigroups to agree to buy $50 billion worth of Bitcoin for the Googles and the Apples of the world and all the other conservative investors. And if we solve that problem, how do the banks custody it? And the second problem, is there a way for me to do fair value accounting on it? Those two things would be massive for adoption. Between now and then, if you want to do the work, if instead of using JP Morgan, you want to go to Fidelity or Coinbase and take 6 months to set up your account, and if you want to explain to your shareholders in a pro forma how to adjust out for your Bitcoin value on a fair value basis using non-GAAP accounting, if you're willing to do that, then you can get in ahead of everybody else. And if you won't, you wait and you buy in when it's 10x more.
And you think the catalyst for that 10x is, it really is the moment that JP Morgan Chase or other big money center banks can custody these for large corporates. That's it. That's the sea change, because there's really no reason why they shouldn't be diversifying the assets on their balance sheet. Is that your take? Because I know that, like Tim Cook, I don't know where it came from earlier this week. He said something like, I own some Bitcoin, but we have no designs on anything. Or I don't know if he said Bitcoin or crypto in general. Is that the thing? And then
I think there's three big. Look, first of all, it's going up by a factor of 10 whether they fix any of the stuff, right? It's going to be a grind up by a factor of 10 just because gold is broken and Bitcoin's going to replace gold. And now everybody in the universe knows they need a non-sovereign store of value in the form of a bearer instrument. So now they're looking, the amount of stories. For last year, people said inflation may be coming. We're not sure. Now the mainstream narrative is flipped to inflation is here. You need an inflation hedge. So it's going to grind up to replace gold. It'll go to $500,000 a coin, regardless of whether they fix these things. But there are three things that are massive catalysts that cause an acceleration. And I don't think that those three things don't take us to 500,000. They take us to 5 million a coin, right? Those three things are a spot ETF where someone can go ahead and buy $100 million of Bitcoin via a security, an ETF security. I think that's one. Two is your bank is going to custody it for you and lend against it. And three is I can mark it up or mark it down on my balance sheet based on fair value. Pari passu, it'll be pari passu to the way I'd handle Apple stock, or at least that good. If you have property with fair value accounting, by the way, it becomes pari passu to the way you'd handle treasury bonds on a treasury balance sheet. Treasuries are better than stocks because treasury is property, whereas a stock is a security, and you're capped out at 40% of your balance sheet as security. So it would be a major breakthrough if you saw any of those three things. And I'll end with this one observation. I tweeted this last week, but I think it's very powerful. It's if the banks can hold this stuff on their balance sheet, then a whole new class of investors are going to buy it. People are going to put in billion and multi-billion-dollar orders to buy it as a treasury asset. Nobody's going to sell it because there's no reason to sell it if you can borrow against it at LIBOR plus or SOFR plus 50 basis points, right? So you'll be borrowing against Bitcoin at SOFR plus 50 or SOFR plus 100 basis points. No one's ever going to sell it. And then, as I joked, you won't be able to afford it. I mean, you will be able to afford it, but, everybody gets Bitcoin at the price they deserve. When the banks normalize it and you can draw a $100 million credit line at 100 basis points from an FDIC-insured bank, at that point, right, we're going to blow through the market cap of gold by a factor of 10.
Right.
So, I think the best thing is those three things are highly likely to happen. I don't know if they happen in 36 months or 24 months or 12 months, but I would be shocked if it's more than 36 months. And I hope, guys, it doesn't happen in 12 months, because my view is the longer it takes, the more progressive the grind, the more time I have to buy more of it.
And I think right now, if I'm not mistaken, you have 114,000 Bitcoin or so on the balance sheet of MicroStrategies, which is remarkable if you think about it. And you mentioned that price appreciation, if these things were to happen. This is a question, and I'm going to let you go because I want to be respectful of your time. It must frustrate you that Jamie Dimon, who runs the most important bank on the planet, in my opinion, is so dismissive, and that's a word that I'm choosing to use, of crypto. Can you speak to that?
Well, partly I'm frustrated, but on the other hand, I started buying at 9,500 a coin. I was late. Everybody gets Bitcoin at the price they deserve. The only thought I had as I was buying the stuff as fast as I could was, oh my God, someone else is going to figure this out and take it away from me. So I have been lucky to be able to buy it while people like Warren Buffett or Charlie Munger or Jamie Dimon don't understand it. I tweeted this morning. I just tweeted a minute ago, right? We're at 30-year all-time high inflation, maybe 40-year all-time high. I said, if there's only one thing you learn in 30 years, learn Bitcoin. People can't get this through their head, but if you look at those shots of New York City in 1905, looking down the avenue, and there's all horses and people, and then they fast forward 15 years to 1915, and there's no horses, and there's all cars, right? It took 10 years, paradigm shift. Everybody adopted it. I think, when electricity showed up, I'm sure there are lots of people that thought this newfangled invention, wasn't very safe. You can find endless stories in the New York Times where they said electricity will kill us, airplanes will kill us. If you go more than 20 miles an hour in an automobile, it'll suck the oxygen out of the cabin and you'll suffocate. Okay, so you can't really understand Bitcoin if you don't spend 10 hours minimally. Most people with billions of dollars in positions of power don't sit down for an entire day and force feed themselves 10 hours of Bitcoin lectures. You spend 100 hours, you start to get a grasp of it. You spend 1,000 hours, you understand it. So It's a complicated idea. It's concentrated energy in digital form. Steel is concentrated energy in metallic form. Electricity is concentrated energy in electrical form. Fire is concentrated energy. Think about the history of the human race. When someone shows up with something new, and it's, do you embrace it or do you reject it or do you dismiss it? And the answer is, if you're going to die, if you don't embrace the fire, you figure fire out. But otherwise you don't. And if you're going to starve to death, you embrace the bow and arrow, or you don't, right? And like everything else, the people that needed it, the people that are desperate, they're open-minded. The guy that got laid off from his job, or the woman that's sitting at home, and they can't do anything and they can't go anywhere for 6 months. They had plenty of time on their hand, and they had a problem to solve, and they discovered cryptocurrency and Robinhood and Bitcoin. And on the other hand, if you ran a big company and you have plenty of assets, you got other things that are distracting you. You're not going to basically say, hold my calls for 40 hours. I'm going to go home and I'm going to go on an intense study. A few people do, but it's just such a new thing that it's going to take a while before people allocate 40 hours or 80 hours to figure this out. But I'm not dejected, Dan and Guy. I'm not dejected because I want to make this final point. Everybody in the world is being asked their opinion of Bitcoin right now. Nobody's being asked their opinion of, should I convert my balance sheet to silver or gold or natural gas or S&P index or the Vanguard 500 or commodity index. The one question everybody's getting asked, Tim Cook got asked yesterday, Vladimir Putin got asked, the head of the EU Central Bank got asked, Jerome Powell got asked, Gary Gensler got asked, every congressman, every senator got asked. I'm surprised nobody's asked Joe Biden yet, by the way. I'm looking forward to when they ask Joe Biden if he's going to actually buy Bitcoin for the United States Federal Reserve balance sheet. They're all being asked this question, got to have an answer. I sympathize with them. They got other responsibilities. They got other distractions. They don't have 10 hours to study this thing. They don't have 100 hours to study it. So they give you their knee-jerk response. Some eventually come around, right? Their ignorance is your opportunity.
Yeah. Well, listen, Michael, you've been very generous with your time and laying out your views in good times and bad for this crypto asset as it's moved around and been very volatile this year. And we appreciate that. And when you talk about the time that people can spend doing this, I know that we've discussed Saylor.org in the past, and you have a lot of free courses on not just crypto, but on a whole host of different things that people can get free degrees in. So that's really cool. So listen, Guy and I really appreciate you taking the time on your lunch to check in here. We've learned a lot from you. You helped us open our minds a little bit to this new phenomenon. And like you say, it's kind of early stages. So we appreciate every time we have the opportunity to talk to you about it. Thanks, Michael.
Yeah, and Michael, real quick before you jump, check out Saylor.org. That's really where you want to go. I mean, if you have any questions, the answers are all there. And Michael, you are a badass. And Dan said good times, bad times. The first song on Led Zeppelin's first album, one of the great rock songs of all time. You are one of the great CEOs of all time. Thank you, Michael.
You're too kind. Rock on, guys.
Thanks,
Bye.
Michael. All right, Guy, we got a couple minutes left before we got to hit it. That's really interesting. Listen, and I really mean that. I think that when Michael, I'm sure plenty of people on here heard that when he said 50,000 to, 500,000 to 5 million. It's, he seems pretty confident about that. It's kind of hard for us to think about some sort of asymmetric sort of situation like that. But I think he and many others kind of feel that that's the opportunity. And I don't think people like you and me will ever be able to get our arms around that unless we were to do this sort of work. But, you hear this all the time in crypto. It's like when they went down the rabbit hole or this rabbit hole or that. And it really seems like the ones that, are just kind of holding on and not selling, as our friend Melton likes to say, don't sell your JPEGs to the bankers. Those are the people that are pretty clear-eyed about this whole thing.
Laser focused, Dan. You are. I don't know if you want to take a question or if you want an Audi 5000, but I really, every time he pops on, it's a joy and it's an honor that he. Listen, I mean, that is the CEO of a major corporation. Oh, by the way, he's probably the most important person in the crypto world, and yet he has a half hour to sort of join us, which is really remarkable.
Yeah, no, it truly is. Well, why don't we do this, Guy? Why don't we wrap it up here? I know it's been a great conversation. I don't think you and I have much more to add, but let's just do this real quickly on the markets, just a quick market touch. So we had, this massive run over the last, week and a half or so. I think it was 9 straight new highs in the S&P 500 before yesterday. Here we are down. Again, we had this, you and I just started this Spaces talking a little bit about this Rivian IPO. What's interesting, because it is $100 billion market cap on its first day. There haven't been too many of those. They raised maybe $10 billion, and we were talking about the volatility in Tesla, so it's still down about 15% from its recent highs. Does this run the risk of being one of those kind of footnotes in the market, Guy? If you look at that S&P chart and you look at the steepness of that rally over the last, call it 5 or 6 weeks or so, and we just broke that uptrend, are we set to kind of maybe pull back towards, I don't know, was it 45.50? That was the breakout level from just a few weeks ago.
Certainly appears that. And you throw on top of that the fact that General Electric made their announcement splitting into 3 companies. You talked about it on the show last night, how that feels sort of market toppy to you. And again, before we get out of here, and I know we disagree on this, and that's what I say what makes markets, but 10-year bonds have moved 13 basis points today. I mean, that is, you just think about the magnitude of that on a percentage basis. If the S&P 500 moved that type of percentage, that's all we'd be talking about. It's remarkable to me how now inefficient the bond markets become, and what I think is the cause of that. So to answer your question, Dan, I think there are a lot of things in place to see that move to the downside.
Yeah, but let me just tell you this. I mean, none more than the dollar breaking out here. I mean, the dollar is trading at levels, new 52-week highs. If you look at that sort of bottom formation that had been making since it broke down in during mid 2020 during the throes of the pandemic here, so that looks like it's about to break out. I do think it's interesting, and I've been saying this. If rates are going higher, which you think they are, the only playbook I know, Guy, is that the dollar goes higher and that some of these industrial commodities go lower. Look at the move in crude oil today. I think that's pretty interesting. I know that you guys talked about gold. I don't really see gold like getting it on right here. I mean, to be very frank, I know you think that it's playing right at a technical resistance level, but it literally was trading much higher earlier today, and now it's trading at the lows. If it fills in that gap, it's over, bro.
And you know what else is over? This Spaces. So thanks to CME Group, our presenting sponsor. You heard Michael Saylor. We're going to try to get Michael on one of our podcasts. On the Tape podcast drops each Friday. Dan, say what you got to say.
Yeah, thanks to CME Group. They are the sponsor of our podcast. Check it out. We do it with Danny Moses every Friday. It's in your favorite podcast store. Last week, we had a great episode. It was called What the Fuck is the Metaverse? We had Milton Demers from CoinShares. We had Jared Dicker from the Churning Group. And we had Packy McCormick of Not Boring Capital. That one's in the podcast stores. Check it out. We went through all things meta and Web3 with 3 what I think are geniuses there. And then we have Michael Batnick of Ritholtz Management and Stephanie Link of Hightower coming on this week. That'll be in the podcast stores on Friday. So check it out. Thanks, Guy Adami. Thanks to Michael Saylor. And we will see you very soon. Thanks. Bye.
Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @_Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern. You can also follow On the Tape in your favorite podcast store for new episodes every week.